Hey guys, and welcome to the Working Money channel. That was a bit of a crack there. Rob Art here posting this. The fact that BTC is hovering around $100,000 is interesting, as that's a strong psychological number. 100%. Of course, there's 10-10. I've told you 100 times. Bulls and bears are fighting it out. A sudden big drop from 100,000 would destroy morale, and a sudden big pump would make people FOMO in. What Rob is talking about here is this, guys. We have been seeing Bitcoin flirt with this $100,000 level now for the last hour. As you guys can see, Bitcoin currently is trading in and around $100,000. It's at $100,444 as of the time of this recording. When we zoom in, this is the 1 hour chart, by the way. Let me zoom into the 1 minute chart just to kind of show you guys how bulls and bears have been fighting it out at that $100 price mark. So the 1 minute chart, we rarely go on the 1 minute chart, but if I were to put a line right on $100,000, I'm going to try to get as close to that as possible. That is 99,999 right there. You guys can see just kind of getting there, dipping down a little further, continuing down above, and then now it's trying to break out of that. So hopefully we do see some changes here psychologically if we do see a significant price rise above $100,000, and then we have bullish tailwinds continuing to take us up. Well, guys, that's obviously a recipe for another bullish pump. This cycle has been so weird. Put it down in the comments if you guys agree. Skycodelic here posting this. Will this be the first cycle where Bitcoin tops without any true expansion? And what he means by that, he says, I don't mean that it hasn't gone up. Of course it has. What I mean is that true impulse of PA on high time frames. The 1 million bowling bands, does he mean Bollinger Bands, show this as well? Either way, I think we all need to know by the end of November. He's also pointing this out, all right? Only 3 of the top 10 coins make slight new all-time highs. Total 2 and Total 3 never make new all-time highs. The total market cap only grows 40% in 5 years. So, it's a very strange market. I got to say, it doesn't feel like the top. But, from a time perspective, it certainly should be the top at this point in time. So this is what's also giving us the inclination that this cycle could extend a little bit. For more information on where I think the market's going to go, and I should say, by the way, my opinions are constantly changing based on new research that I'm finding, more analyst perspectives on Twitter, and my own research that I'm doing. You guys can follow me at patreon.com/workingmoneychannel. That is my up-to-date perspective on where I think the market's going to go. It is only $5 a month, but you got to subscribe and stay subscribed to lock in. This is a very, very strange and difficult and very new market to navigate. So check it out if that's something you guys are interested in. So we still have fear and greed sitting at 21. A lot of retail traders are very fearful right now. I'm sure they bought during the last pump and have not seen returns yet. We've got the market cap down by 2.68%. Some cryptocurrencies, it's weird because some cryptocurrencies are flying, like Zcash up 18.4%. And that's not the first day that we've seen some of these privacy coins just kind of rip. There's a few coins in the green, but look at this one, for example, ICP up 27%. Up 173% over the last 7 days. So, like I said, some of these coins are ripping at the moment. Near Protocol's up 19.54. We've got Ethereum Classic up 13.36. So, select cryptocurrencies, Filecoin, that's another one up 57% on the day. Select cryptocurrencies up, but the majority of the crypto space, a lot of the OG cryptocurrencies are down. So what to expect next? Stock Money Lizard's posting this. His bull bear indicator for Bitcoin is flickering. The current month candle, I guess I should say we are just starting the month, so it is only November the 7th. I guess we're 1 week in now. Keeps flickering, okay? Keeps flipping from red to green, back to red, back to green, so on and so forth. The monthly close will matter, and so we still have 3 weeks. If we close red in November, I'll officially change my narrative and strategy. So here's what changes. My stacks stay untouched. Trades will run with TP and SL. I stop buying pullbacks and stop posting a bullish bias. I wait for Bitcoin to break below the EMA 200, and then he'll turn bearish. But for now, guys, the EMA 200, if you guys can see right in there, we are still technically bullish. We are still above that candlestick, but it is dipping its toes down in bearish territory. So that's why the monthly candlestick keeps flipping. He goes on to say we're not there yet, one step at a time. We're almost there. Blockchain Packer, though, commenting on this, we saw the 1 week and 2 week charts show bearish divergences and flip bear in September. So his analysis here, now we see the monthly indicators teetering on the edge of flipping bear. So again, another analysis with regards to the monthly indicator. With a 100% success rate, he says, when monthly MACD crossed, it meant Bitcoin was already in a bear market. So he's got the MACD down here on the chart, and it is slowly turning over, but we are not seeing that red yet. Bitcoin is turning over on itself. Of course, the monthly candlestick will tell us a lot, but we're not there yet. On a positive note, though, guys, Chad Steingraber bringing this up, we're getting that crypto market structure law. I mean, I think we need, part of this is we need the government, the U.S. government, to reopen. What he's saying is Bitcoin and altcoins, what we saw in 2015 to 2017 versus 2019 and 2021, is similar to what we could be seeing in 2024 to 2026. We had the bear market accumulation phase, followed by an alt season, and then that final blow off top for Bitcoin. Could we be at the beginning of this, and we just need that final push to the upside, or is this it, and is it going to turn over on itself? So he also posted this tweet here, so retweeting his own tweet with regards to the market structure bill. Okay, the ISM Manufacturing, or PMI, this monthly index measures the health of the U.S. marketing sector. It is based on a survey of purchasing and supply executives across various industries and tracks factors such as new orders, product, employment, and inventories. ISM, formerly known as the Non-Manufacturing Index. This report tracks the economic activity and performance of the U.S. services sector, which accounts for a significant portion of the U.S. economy. I'm just going to bring up the chart here while I read this. Reader interpretations. Okay, so for both PMIs, a reading above 50% indicates expansion in the respective sector, while the reading below 50 signals contraction. So when we've seen Bitcoin bull cycles, they have coincided with the US ISM manufacturing and new orders. Because this one has been prolonged, you guys can see it down there, we haven't seen that expansion yet. Maybe this is why we haven't seen Bitcoin just kind of blow off top. This is highly influential. They are some of the earliest economic indicators released each month, providing a timely snapshot of economic trends. Purchasing managers are at the forefront of their company supply chains, making them well positioned to assess real-time business conditions and anticipate future demands. So if we do see expansion here for the ISM, guys, that would mean a blow off top for Bitcoin and altcoins like XRP. Currently, XRP is also just kind of hovering. Unfortunately, we're seeing XRP right now trading in and around $2.18. And you guys can see XRP on the 1 minute looks very similar to Bitcoin. That dip down, I can almost see this inverted head and shoulders pattern on the very micro time frame. Again, 1 minute time frame. Compare that to Bitcoin, we've got that same pattern there. If I remove that, you guys can see inverted head and shoulders on the 1 minute, but it really doesn't mean too much on the 1 minute. We need to see significant expansion. The Bitcoin weekly candle closes in 3 days, okay? And this one kind of matters. This is coming from Lark Davis. We're sitting right at the 50-week SMA, the line in the sand. Now, he says there are two camps on this one. The classic 4-year cycle believers who think history will repeat itself. Then there's the extended cycle believers who thinks the 4-year cycle is dead, and both sides have a valid argument. No one knows how this plays out, and OGs are still thinking this could be an extended cycle, but the weekly close will be crucial to watch. If we close below the 50-week SMA, things could get complicated, and we would have to turn bearish. So all these indicators obviously play a role in where the market's going to go next. For more information, again, I'm just going to put the link up there, patreon.com/workingmoneychannel, only $5 a month, cheaper than some people pay for a cup of coffee every single day, by the way. So check it out. If you guys are interested in my more in-detail approach to the crypto market, Tom Lee is of the opinion that we are entering an elongated crypto cycle. The bull market didn't end, it just restarted. Tom Lee just laid it out clearly that the Bitcoin dip rather wasn't about fundamentals. It was liquidity plus a shutdown plus a funding stress plus the October 10th deleveraging.
Well, check out Bitcoin because that's rallying more than 3% after dipping below $100,000 yesterday for the first time since June. So what does today's bounce back mean for crypto and for the broader market? Joining us now is Tom Lee, Fundstrat Head of Research and CIO and a CNBC contributor. And Tom, it's great to have you back on.
Great to see you.
So let's start right there, because we did have a bit of a bounce back here in Bitcoin and really across the crypto landscape today. But yesterday, as Katie Stockton over at Fairlead pointed out, Bitcoin broke below its 200-day moving average. I know she's watching some technicals there pretty closely. How about you?
Yeah, I mean, I think it makes sense to watch the technicals for Bitcoin. As you know, Bitcoin is very sensitive to market liquidity and also perceptions about risk appetite and risk premia. And, over the past couple of weeks, I think there have been headwinds building, right? From the government shutdown to a hawkish Fed cut that was done last month and uncertainty about December. And as you know, with the shutdown, Treasury liquidity, the Treasury general account's actually been building cash. So I think all of these created a cascade of problems that put pressure on crypto. But hopefully, as you know, headwinds become tailwinds when you can resolve these things.
Just the fact that we have had this deleveraging event, if you will, in Bitcoin. I mean, what do you watch to know that that's washed out? And I guess perhaps just as importantly, has this been playing out the way it has previously in the market?
Yeah, in some ways. I mean, I think we have to go back to two different episodes. 2022 when FTX collapsed, and then in 2020 when we had the COVID shock. And in both cases, those were really widespread deleveraging events in crypto, because as you know, in crypto, there is typically a lot of leverage. The October 10th deleveraging was the biggest in history. And that means there are still ripple effects being felt even 2 weeks later. There has been a DeFi protocol streamer that actually reported a pretty sizable loss, and that created further ripple effects. And that's what happened yesterday, along with this thing called the balancer hack. So I'd say it's probably still a couple of more weeks. The good news is there aren't a lot of bodies floating to the surface, so it doesn't feel systematic, but it's going to take some time for confidence to come back. And I think that's why crypto took it so hard in the last couple of weeks.
Got it. So what's the read-through to stocks, specifically the QQQ or the NASDAQ 100? We know there's always been this very strong, or in more recent years, a strong correlation between the two.
Yeah, and the linkages are growing because, as you know, like market makers actually trade both products. And I think in general, people get nervous because part of it is stocks have been up 6 months in a row. And we have to keep in mind that in October, we had the wobble in the first half before markets found their footing. I wouldn't be surprised if people are just pausing here and saying, look, we still have the shutdown. We've had 6 months in a row, stocks are up. Markets are overbought, and they get a little nervous. But let's say that just means a wobble in the first half of November. Since 1928, 100 years of data, when markets have been up 6 months in a row, 5 or 6 times you build on those gains with an average gain of 3%. And in 1936, the market was flat. I'm sorry, 1942. So in other words, you either have a flat November or actually strong. It's actually a good sign we've been up for 6 months in a row.
So I just edited that clip for time. I will link the entire 5-minute, 40-second clip in the description of the video for you guys if you're interested. A lot of interesting points here that Tom Lee makes. We have not had no systemic FTX-style contagion this time. So we haven't really seen any kind of major cataclysmic event that would suggest that we are in a bear market. He brings up the 6 months in a row for the S&P 500 being up. So if I bring up the S&P, and currently the market is closed at the moment, I'm going to throw that on the daily just to show you guys that we are up still, even though the S&P, for example, is retracing a little bit. We have ultimately seen higher highs. Maybe you can see that a little better on the weekly. Higher highs, continuing to print higher highs. So this is where we're at, guys. Wanted to thank Crypto Russ. Wanted to thank, who's this? Lark Davis here. Wanted to thank Chad Steingraber and Blockchain Backer, Stock Money Lizards, along with Skycodelic and Rob Art just for posting those. So this is a big question mark still. I mean, for XRP hodlers, we just recently got a lot of great news coming out of Swell. And guys, now a new application has been entered. Ripple Prime was just filed under insurance, financial affairs, monetary affairs, and real estate affairs. History is repeating itself. The next wave of financial infrastructure is being built on XRP. So this is the latest Ripple Prime trademark. And he was actually just responding to this original tweet from May the 8th. Ripple is opening a new office in Abu Dhabi for Hidden Road. And so now, guys, this is all making way more sense. Ripple is already active in the UAE, the United Arab Emirates. We're now seeing the next stages of developments with regards to these Ripple, these newly acquired Ripple partners. So guys, this is just getting larger and larger, on top of which, despite the bearish market, we're also seeing this. The XRP ledger sees 21,595 new wallets in 48 hours. And that's interesting considering the price has been languishing. We don't usually see this kind of thing when prices are staying flat or kind of moving down. When we're not seeing a lot of trading activity, we generally don't see big spikes in wallet addresses, like from back here. Back in July 2025, we saw a spike when the price spiked, and now we're seeing a spike. It almost seems like, for what reason? Things that make me go, I think, there could be a lot going on in the background. Bayberry Capital is also suggesting XRP remains one of the most misunderstood assets in the digital economy. Michael Branch bringing us this article here. So a new report was just put out. Despite the higher network activity, expanding settlement use, and renewed institutional interest, the token's price fails to reflect its role as a foundational bridge for liquidity transfer. So this is still because we aren't, the full puzzle hasn't been put together yet. The pieces are still coming in. Ripple is slowly, through drips and drabs, giving us more information on who they're partnering with. The firm argues that XRP is still viewed as a speculative altcoin, and it is, guys. It's still following Bitcoin rather than a critical component to financial infrastructure. Bayberry, though, compared the current moment to the early days of the internet, when routers and protocols were being developed long before mainstream investors understood the long-term significance. So fresh data from CryptoQuant supports that shift. Over the past 72 hours, open interest in Bitcoin and Ethereum's futures have dropped, while XRP accumulation has grown. Analysts see this as a clear indication of capital rotating into assets with tangible use cases and long-term institutional alignment. CryptoQuant also notes that XRP's relative stability reflects constructive accumulation rather than a lack of investor interest. The firm describes the pattern as a confidence-based buildup in anticipation of broader real-world adoption. So we are seeing more companies, more individuals. I don't know. We don't know who they are, but more investors investing in XRP. And you compare that to the metrics regarding Bitcoin and Ethereum, the top two cryptocurrencies. Maybe that is why we are seeing more wallet addresses opening up and just opening up within the last 48 hours. Maybe there is something going on that we do not know about. Anyway, wanted to thank Michael for posting that. And guys, I know this might sound a little ambitious. XRP is going to $750 as Jake Claver prediction is becoming very real. This coming from Skipper. And don't hold your breath, guys. I don't want to be the bearer of bad news. I love me a good XRP price prediction, but we got to be careful. We got to maintain our expectations. Again, if you want to hear what I'm personally doing this bull run, you guys can follow me again, patreon.com/workingmoneychannel. I'm going to play you this clip though. If you guys are interested in hearing this perspective, there's some holes in it, in my opinion. Listen to this.
Jake Claver's $750 XRP price prediction by the end of the year is actually becoming very real. You got MasterCard, Ripple, WebBank, XRP, and Gemini all in bed together. Let's talk about it. Settlements between MasterCard and WebBank will be used RLUSD stablecoin on the XRP ledger. Yes, that's on the XRP ledger. This is the first time a US credit card issuer plus major card network will be settled via crypto rails, and that's on the XRP ledger. This means the banks are testing blockchain, getting ready for the back-end plumbing. This is the first proof of concept for crypto replacing our legacy rails: ACH, SWIFT, FedWire. If you've been paying attention about the news with Ripple and XRP the past few weeks, then you know that we're having crazy adoption and crazy news coming out literally 2 times a week. If you think that all this tying together is something that's only been planned out for the past 2 to 3 weeks and that this is new news, then you're extremely naive. These groups have most likely been planning and building this out for years. And that's exactly why Ripple has those 1,700 NDAs, is most likely for stuff like this. Mind you, all this is happening while Ripple hasn't even been approved for their banking license yet that they applied for back in July. There's been this narrative going around that the banks and institutions are only interested in using the stablecoins. Now, for the first time, we're seeing integration straight on the XRP ledger. If you're not paying attention and you're not staying up to date on stuff like this, you're going to be extremely left behind. I cover daily and weekly news updates right when it comes out. We'll see you guys. And no, I do not think Jake Claver is crazy.
Down here it says, I'm not too familiar with Jake Claver's predictions, but it will rise above $35 to $50 by November the 22nd. It's already the 7th. Fundamentals seriously don't indicate that as far as I'm concerned. And this idea of a $750 XRP, guys, that's going to take time to build. It could happen eventually. Chances are it will happen eventually, but we do have to have a mature ecosystem. Currently, we are still trading in spec. I feel like I say this time and time again. For more information, though, on where I see the price going for XRP and others, follow me, patreon.com/workingmoneychannel. And if you like the content, guys, if you like my opinions and you like following Working Money Channel, help support the channel by moseying on over to the Working Money Channel merch store. Link is in the description of the video. Thanks so much to everybody who's helped support the channel through your merchandise purchases. It's all very greatly appreciated. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.